In this video, I'm going to share with you the latest insights on the upcoming Fed meeting and its potential impact on interest rates. Let's get into it. Hey friends, welcome back to the channel. I'm Iggy here, and I've been covering topics such as stocks, finance, CPF, and basically everything related to growing your wealth. The Investing Iguana is featured and ranked 8th in the 2023 Influential Tigers by Tiger Brokers with over 800,000 reads. I've also covered over 500 videos and over 200,000 watch hours as of August 2024. I occasionally focus on topics related to the regional or world economy. Today, we're diving into a hot topic that's got everyone in the finance world buzzing. The upcoming Federal Reserve meeting on September 18th is shaping up to be one of the most anticipated events in years. Why? Because it looks like we might finally see some interest rate cuts. Now, you might be wondering, Iggy, why should I care about what's happening in the US? Well, my friends, what happens in the US economy often has ripple effects across the globe, including right here in Singapore. So, let's break it down. First off, let's talk about what the experts are saying. I've been digging into reports from some big names in the finance world, and here's what I've found. Most of them are betting on what they call a soft landing for the US economy. What does that mean? It's basically a best-case scenario where the economy slows down just enough to cool off inflation, but not so much that we end up in a recession. Now, there's a lot of fancy jargon out there, but let me put it in simple terms. Imagine you're driving a car and you need to slow down. A soft landing is like gently easing off the gas and applying the brakes smoothly. You slow down without jolting everyone in the car. That's what the Fed is trying to do with the economy. But here's the thing. It's not just about inflation anymore. The Fed is also keeping a close eye on the job market. They're looking at the unemployment rate, which has been ticking up slightly. It's still pretty low at 4.2%, which is good, but any increases make economists nervous. So, what does all this mean for interest rates? Well, most experts think we're going to see some cuts. The question is, how many and how fast? Some are saying we might see 3 cuts of 0.25% each by the end of the year. That would bring rates down, but not back to the super low levels we saw a few years ago. Now let's talk about what this means for us here in Singapore. When the US cuts rates, it often gives other countries, including Singapore, room to adjust their own rates. This could mean lower borrowing costs for businesses and individuals. It could also affect things like our CPF interest rates and mortgage rates. But here's where it gets interesting for investors. As interest rates start to come down, bond prices tend to go up. This means there might be some good opportunities in the bond market. We've already seen Singapore's T-bill yields start to drop, which is making some investors take a second look at fixed income funds. Now I know what some of you are thinking. Iggy, this all sounds great, but what if things don't go as planned? That's a smart question. While most experts are optimistic, there are always risks. Some are worried that if the Fed cuts rates too quickly, we could see inflation spike up again. That would be like slamming on the brakes and then accidentally hitting the gas. Not a smooth ride at all. There's also the possibility of a recession. While it's not the main prediction, it's still a risk we need to be aware of. If that happens, we might see longer-term interest rates fall even more as the Fed tries to stimulate the economy. So, what should you do with all this information? First, don't panic. These are predictions, not guarantees. It's always a good idea to have a diversified investment portfolio that can weather different economic conditions. If you're thinking about getting into fixed income investments, now might be a good time to start researching your options. For those of you with loans, keep an eye on interest rates. If they start to fall, you might have opportunities to refinance at better rates. But remember, timing the market perfectly is tough, so don't stress too much about getting the absolute best rate. And for my fellow Singaporeans, let's not forget about our CPF. While changes in global interest rates can indirectly affect CPF rates, our system has built-in protections to keep our retirement savings growing. Still, it's always good to stay informed and adjust your financial plans if needed. Remember, the key to successful investing and financial planning is to stay informed, think long-term, and not make rash decisions based on short-term news. Keep an eye on the big picture, and don't let daily market fluctuations stress you out. If you guys enjoyed this video, then you're going to love my video on 4 stocks to buy if interest rates drop. In that video, I provide an overview of 4 hidden gems that could potentially skyrocket if interest rates take a downturn. It's a must-watch for anyone looking to maximize their investments in this period.